Good morning, students. This is the last lecture for subsidiary books. In this lecture, we are going to discuss about the other subsidiary books, which are bills receivable book, bills payable book, cash book, and journal proper. Till now, we have already studied 4 books, which 4: purchase book, sales book, purchase return book, and sales return book. And for the remaining books, we will have a brief idea about that. Bills receivable and bills payable book. When a seller has to receive payment from some customer, at times generally the seller draw necessary bill on the customer for the sum due. The customer accept and record such bill and return to the seller. Such bill is known as bills receivable for the person who draws it, and also it is receivable for the holder of bill, and the person who draw the bill is known as drawer, and the person who accept the bill is known as drawee. We have a separate chapter for this, chapter number 4 of part 2. Our account textbook has 2 parts, part 1 and part 2. So in part 2 textbook we have a separate chapter about this. So basically, bills receivable and payable is a transaction which takes place between two persons who are having debtors and creditors relationship, where one has to collect amount from another in a future date. For that reason, they agree to sign a bill of exchange, where the person who has to receive the money draw a bill, means he writes a will on the other person, including that pay me that amount, whatever it is, 5,000, 10,000, or any amount there could be. Pay me this much amount after these many days or months, and or to someone on my condition, on my instructions. So here someone write and someone sign. The one who writes is a drawer of the bill, he is also a creditor, and the person who accept the bill, who sign the bill, is a drawee. He is a drawee. Okay, next, this is the specimen of bills receivable book. Bill number, date of bill and its receipt, name of acceptor, period of bill, condition, date of maturity, LF number, place of payment, amount, and remark. So basically the columns itself says what to write. Bill number, every bill will be having its number, so bill number will be written in that column. Date of bill and its receipt will come in that column, on which date the bill was drawn and on which date it was signed. Name of the acceptor, the person who is going to accept that bill, the name of that person will come, and then period of bill, 1 month, 2 months, 3 months, 15 days, 10 days, whatever it is. Then if it is signed with any condition, that condition will also be mentioned. Then date of maturity will come. Date of maturity can be found from the date of bill. We will be adding the period of bill. Suppose it is a period of bill is 2 months, and bill is drawn on, suppose, 1st September. So 2 months will get over on 1st November. So 1st November can be the maturity date. Moreover, 3 days of grace are added, so the maturity date will be 4 November. Whatever is the bill period, 3 extra days are given, so the maturity date will be 4 November. And then it is LF number, then place of payment, where the payment will be done, and amount and remark, if any. Okay, the same way bills payable, bill number, date of acceptance, here we are accepting, no, so when we have accepted, name of drawer for whom we have accepted, date of bill, period of bill, then condition, if any, date of maturity as usual, LF number, amount, and remark. Okay, let's talk about next book, cash book. So cash book, many times we have discussed about cash book while solving the sums of the subsidiary books, purchase book, sales book, purchase return book, sales return book. That cash book is a book which is prepared to keep record of cash transaction. Okay, so a book where only cash transactions are recorded, all cash transactions are recorded, is known as cash book. Now earlier also in one lecture we have discussed about the types of cash book. Here also we will discuss about it. There will be three types of cash book. One is simple cash book, second two columnar cash book, third three columnar cash book. So simple cash book is, there will be one column for amount that can be either cash or bank. In two columnar cash book there will be two columns for amount. One could be cash and bank. These two columns can be cash and bank, or maybe cash and discount, or maybe bank and discount. Three columnar cash book, we have all three columns of amount: bank, cash and discount. Okay, right? And then another book we will study, that is petty cash book. But petty cash book is a part of cash book only, which is prepared to record day-to-day petty business expenses. Petty business expenses means very small business expenses, suppose stationery expenses, tea and refreshment, wages, etc. So it is a part of cash book itself. Then, and moreover, the detailed study we are going to have about cash book in next chapter, which is chapter number 7. Okay, let us talk about the last book, journal proper. Journal proper is nothing, just it is like journal only. We will prepare everything like journal. We will give entries as we give in journal. The thing is, when you are maintaining subsidiary book, so what is recorded in journal proper? The transaction which cannot be recorded in any of the subsidiary book prepared will be recorded in journal proper. Journal book is prepared to record the transaction which are not recorded in any of the 7 subsidiary books discussed so far. We have separate chapter number 8 for the same. We will be learning about it. So in journal proper we are recording those transactions which cannot be recorded in any of the subsidiary book, or the transaction for which no subsidiary book is kept. Say for example, if we are not maintaining purchase return book and there is a transaction of purchase return, then as we are not maintaining purchase return book, we will be recording it in journal proper. Okay, so the transaction which cannot be recorded in any of the subsidiary book, or for which no subsidiary book is kept, will be recorded in journal proper. But detailed study we will have in chapter number 8. Thank you.